What is happening in the market right now? Welcome back to Bitcoin Bulletin, your ultimate source for the most electrifying updates in the world of digital assets. The pace of change is absolutely relentless, and if you're not plugged in, you're missing out. Today, we've got a rapid-fire rundown that you absolutely cannot afford to miss. We're diving deep into the resilience of Bitcoin as whales make their moves, exploring the surprising divergence between Bitcoin and gold, uncovering the altcoin season that's already brewing, and revealing a massive new deployment that's set to shake up the Solana ecosystem. Get ready, because this is your essential briefing for what's moving the needle. Don't go anywhere, you need to see this. First up, Bitcoin's strength in the face of major selling pressure. What does this tell us about the big players and where the market is heading? We've got the breakdown. Then, a fascinating contrast emerges as gold quietly aims for new highs while Bitcoin faces headwinds. Why is this happening, and what does it mean for your portfolio? We're digging in. Get ready for altcoin season, as specific coins are absolutely soaring, while Bitcoin and Ethereum take a breather. We're identifying the key indicators and the breakout stars you need to watch. And finally, a massive $1.5 billion yield-bearing Bitcoin token is making its debut on Solana. This is a game-changer for DeFi, and we're breaking down all the details. Stick around because this is Bitcoin Bulletin, and we've got all the critical insights you need. Make sure you're subscribed and have that notification bell on so you never miss an update. Bitcoin's unwavering strength amidst whale activity. In a market that's constantly testing the mettle of its participants, Bitcoin has once again demonstrated a remarkable level of resilience, even as significant whale entities have been observed engaging in selling activities. This behavior, often a precursor to price corrections, has instead revealed a deeper, more institutional-level strength underpinning the digital asset. The fact that Bitcoin has absorbed this selling pressure without succumbing to a significant downturn is being interpreted by many analysts as a powerful signal of underlying bullish momentum, potentially driven by a new wave of sophisticated, long-term investors. For weeks, the market has been buzzing with activity from these large holders, often referred to as whales due to the sheer volume of Bitcoin they control. Their transactions, which can move the market considerably, have been closely scrutinized. While some of these movements could indicate profit-taking or strategic rebalancing, the broader market's reaction has been surprisingly muted. Instead of a sharp decline, Bitcoin has maintained its position, indicating that demand from other market participants, particularly institutions reportedly increasing their allocations, is robust enough to absorb the supply being offloaded by these whales. This dynamic suggests a maturing market where large-scale selling doesn't automatically trigger a cascade of panic. The implications of this resilience are significant. It points towards a potential shift in market sentiment, where the influence of retail panic selling is diminishing, being replaced by the more strategic, data-driven decisions of institutional players. These entities are often less susceptible to short-term volatility and more focused on long-term value appreciation. Their continued accumulation or holding of Bitcoin, despite the selling pressure from whales, signals a strong conviction in the asset's future potential. This could be driven by various factors, including its perceived role as a digital store of value, a hedge against inflation, or simply its growing adoption in the financial ecosystem. The narrative of Bitcoin as digital gold gains further traction when such price action occurs, as it mirrors the behavior of traditional safe haven assets that can withstand periods of selling pressure. Furthermore, this resilience may be a precursor to renewed bullish momentum. When a market successfully navigates significant selling pressure from large holders, it often emerges stronger, clearing out weaker hands and setting the stage for a more sustainable upward trend. Analysts are closely watching for confirmation of this trend, with many pointing to key technical indicators and on-chain data that suggest accumulation is still occurring at a healthy pace. The ability of Bitcoin to hold its ground in this scenario is not just a testament to its current market structure, but also a strong indicator of its potential to reach new all-time highs in the near future, especially if broader macroeconomic conditions continue to favor risk assets. This development is certainly a major talking point among traders and investors, with many community discussions focusing on whether this is a true sign of institutional dominance or a temporary pause before a larger correction. The consensus emerging is that the market is evolving, and Bitcoin's ability to absorb whale selling is a critical indicator of its growing maturity and potential for sustained growth. But what happens when the king of crypto takes a breather? We're seeing a fascinating divergence in the market right now, and our next story reveals a surprising contender quietly making massive moves. Stay tuned as we explore the stark contrast between Bitcoin's performance and gold's unexpected rally. Bitcoin under pressure as gold surges to new records. In a stark display of market divergence, Bitcoin has found itself under steady selling pressure, retreating from recent highs as the traditional safe haven asset. Gold quietly surges towards new record-breaking territory. This economic tug-of-war highlights a fascinating disconnect where macroeconomic factors that typically boost digital assets are failing to ignite Bitcoin, while simultaneously propelling gold to unprecedented levels. Bitcoin's trading session on Thursday saw it dip below the $113,000 mark, eventually settling around $111,800, marking a slight decline over the preceding 24 hours. This sluggish performance followed an attempted rally that was quickly met with selling throughout the latter part of the U.S. trading day. Other major cryptocurrencies also experienced a downturn, with Ether, ETH, and XRP seeing more substantial drops of 2.1% and 1.4%, respectively. Amidst this broader crypto market weakness, Solana's SOL token emerged as a notable outperformer, climbing 3.1% in the same period, suggesting pockets of strength within the digital asset space despite the overall pressure on Bitcoin. Meanwhile, gold has been on a remarkable ascent. While Bitcoin struggled over the past 2 weeks, the yellow metal has been steadily gaining ground, rising another 0.8% on Thursday to reach $3,477 per ounce. For the month of August, gold's performance has been even more impressive, with a nearly 4% increase compared to Bitcoin's 5.2% slide. This rally has brought gold tantalizingly close to its all-time high of $3,534, a level reached earlier in the month amid concerns over potential U.S. tariffs on Swiss gold bars, fears that have since been allayed. The current proximity to this record high underscores gold's strength and its appeal as a stable store of value in uncertain economic times. The critical question on many investors' minds is why these traditional market drivers, such as lower interest rates and a weakening U.S. dollar, which historically provide a tailwind for riskier assets like Bitcoin, are failing to translate into positive momentum for digital gold. This phenomenon suggests that either the market narrative around Bitcoin as a macro-sensitive asset is temporarily on hold, or that specific factors within the crypto market itself are currently overshadowing broader economic trends. The upcoming month of September, with the anticipated resumption of Federal Reserve rate cuts and potential new appointments to the Fed, could prove pivotal. These developments, often seen as bullish for risk assets, might eventually reignite interest in Bitcoin. But for now, gold is clearly capturing the macro spotlight. This divergence has sparked considerable debate within the financial community. While some analysts believe Bitcoin's current underperformance is a temporary consolidation before a broader market recovery, others see gold's strength as a sign of a flight to safety, potentially indicating underlying economic anxieties that could weigh on riskier assets like cryptocurrencies. The differing trajectories of these two major assets provide a complex picture of the current investment landscape, forcing a reevaluation of traditional correlations and market drivers. While Bitcoin and gold play out their contrasting narratives, a different kind of excitement is building in the crypto world. We're seeing a shift in capital, and some smaller assets are absolutely exploding. Get ready, because we're diving into the altcoin season that's officially heating up. Altcoin season ignites as Bitcoin and Ethereum consolidate. Crypto enthusiasts, brace yourselves. The winds of change are blowing through the market, and it appears altcoin season might be upon us. This coveted period, characterized by alternative cryptocurrencies significantly outperforming Bitcoin, is often marked by a rotation of capital from the market leader into smaller, more volatile assets, creating lucrative opportunities for those looking beyond the top two. As Bitcoin and Ethereum pause for breath, a host of other digital assets are beginning to surge, signaling a potential shift in market dynamics. The broader crypto market is currently valued above $3.9 trillion, and the latest data from CoinMarketCap's Altcoin Season Index has climbed back up to 53 out of 100. While this is still shy of the frenzy seen in December 2024, when the index hit a staggering 87, the consistent upward trend since April's low of 12 indicates a growing interest in altcoins. This resurgence aligns with market analysis, suggesting a rotation of funds from Bitcoin into alternative assets, a classic harbinger of an altcoin season. David Duong, Coinbase Institutional's global head of research, noted 2 weeks ago that current market conditions already signaled the early stages of such a season, pointing to a decline in Bitcoin dominance from 65% in May to 59% in August, a key indicator that altcoins are starting to capture a larger share of the market capitalization. Several key macroeconomic indicators are contributing to this evolving landscape. The Federal Reserve's stance on interest rates remains a critical factor. Anticipated rate cuts, coupled with potentially dovish appointments to the Fed, could inject greater liquidity into risk assets, including cryptocurrencies, thereby fueling altcoin rallies. Improved market liquidity and increasing stablecoin issuance provide the necessary ammunition for altcoins to experience significant price appreciation. Duong's report highlighted the alignment of these stronger-than-expected macro conditions with a clearer crypto regulatory framework, suggesting that the market thesis for this growth has largely played out as anticipated. For investors wondering whether it's time to shift their portfolios, the decision hinges on risk appetite. However, the current market action is undeniable. While Bitcoin appears to be consolidating, with its daily performance looking relatively subdued, opening at $111,272 and trading around $112,497, up a modest 1%, and its technical indicators showing weak momentum, ADX at 17, suggesting choppy, directionless trading, other coins are indeed running. Solana, Sol, has seen gains of over 16% in the past week, and Hyperliquid has notched gains above 14%. But stealing the spotlight is Chronos, CRO, the native token of the Crypto.com platform, which has experienced an astonishing surge of over 120% in the last 7 days, trading at 31 cents. This remarkable performance is largely attributed to a significant business deal with Trump Media, the company behind Truth Social. The integration of Crypto.com's wallet infrastructure and the adoption of CRO as a utility token for rewards and subscriptions on the platform, along with substantial investments between the two companies, has provided a powerful catalyst for CRO's price action. Technically, CRO's charts show strong bullish momentum, with its average directional index, ADX, at 39 indicating a powerful trend, while its relative strength index, RSI, at 89 suggests it's in overbought territory. This can often persist during FOMO-driven parabolic moves. The expanding spread between its 50-day and 200-day exponential moving averages, EMAs, further confirms this bullish trend. In contrast, Bitcoin's technicals are less convincing, with its ADX at a week 17 and its price action trading between key EMAs, suggesting a more neutral to bearish short-term outlook. Ethereum, however, presents a more bullish technical picture, with a strong ADX at 36 and its EMAs showing a healthy uptrend, indicating it could potentially lead any broader altcoin rally. If the historical pattern of a red September followed by a strong October repeats, the final quarter of the year could indeed usher in a full-scale altcoin season. This market rotation is a key topic of discussion, with many investors closely monitoring the altcoin performance and looking for signs of sustained momentum. The potential for significant gains in the altcoin market, especially as Bitcoin consolidates, presents a compelling narrative for the coming weeks. Now, as altcoins are heating up, a major player is bringing a significant amount of Bitcoin liquidity directly onto a popular blockchain. This move could redefine how we think about Bitcoin integration in the DeFi space. We're about to reveal a massive deployment that's set to make waves. Lombard Finance deploys $1.5 billion yield-bearing Bitcoin token on Solana. In a significant development for the decentralized finance ecosystem, Bitcoin staking startup Lombard Finance has successfully deployed its yield-bearing LBTC token onto the Solana blockchain. This strategic move expands access to a unique product that allows holders to earn approximately 1% annual yield while maintaining full Bitcoin backing, effectively bridging traditional digital asset value with the speed and efficiency of a modern blockchain. The LBTC token is engineered through a decentralized validator consortium, a structure designed to provide real-time proof of reserves, thereby enhancing transparency and trust for its users. Since its inception, the LBTC token has seen substantial adoption, amassing over $1.5 billion in circulation across various blockchain networks. Notably, it achieved a total value locked, TVL, of $1 billion within a mere 92 days of its initial release earlier this year, underscoring the strong market demand for yield-generating, Bitcoin-backed assets. The expansion to Solana is particularly noteworthy. It brings native Bitcoin liquidity directly to Solana's burgeoning decentralized finance, DeFi applications, a crucial step in integrating diverse digital asset classes into high-throughput blockchain environments. This deployment follows Lombard Finance's prior successful integrations with other major networks, including Ethereum, Base, Sway, and BNB Chain. The company has stated that robust liquidity incentives are being implemented on Solana from the launch date, aiming to attract significant trading volume and participation from the outset. This initiative is expected to foster deeper integration and utility for LBTC within Solana's DeFi ecosystem, potentially attracting more users and capital to both Lombard's product and the Solana network. The implications of this deployment are far-reaching. For Solana users and developers, it offers a new avenue to access yield-generating Bitcoin exposure directly within their preferred ecosystem, without the need for complex cross-chain bridges or centralized intermediaries. This can significantly simplify the process of incorporating Bitcoin's value into DeFi strategies, such as lending, borrowing, and yield farming. For Lombard Finance, the move to Solana represents an opportunity to tap into a rapidly growing user base and a vibrant DeFi community known for its innovation and fast transaction speeds. The choice of Solana, with its low fees and high scalability, is well suited for a product aiming to provide accessible yield. The market reaction to this news has been positive, with many in the DeFi community hailing it as a significant step forward in making yield-bearing Bitcoin more accessible and integrated across different blockchain platforms. Analysts suggest that such developments are crucial for the continued growth and mainstream adoption of cryptocurrencies, as they demonstrate the practical utility and innovative potential of blockchain technology. The ability to earn yield on a fully backed Bitcoin asset, seamlessly integrated into a leading DeFi ecosystem, addresses key investor demands for both security and returns. This move by Lombard Finance could set a precedent for future integrations, potentially driving further innovation in the tokenized Bitcoin and DeFi space. This deployment is a clear indicator of the ongoing innovation within the crypto space, particularly in bridging traditional digital assets with the dynamic world of decentralized finance on new, high-performance blockchains. And that brings us to the end of today's essential updates. We've covered a lot of ground, from Bitcoin's surprising strength to the rise of altcoins and major DeFi integrations. Don't go anywhere, because we're about to hit you with a lightning round recap and a full call to action. And that's a wrap on another action-packed Bitcoin bulletin. We saw Bitcoin show incredible resilience against whale selling, gold quietly making record highs while Bitcoin lagged, the unmistakable signs of an altcoin season kicking off with major gains, and a massive $1.5 billion Bitcoin token landing on Solana. Don't miss out on any of these critical market moves. Hit that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto news, and ring that notification bell so you're always the first to know. Let us know your thoughts on these stories in the comments below, and make sure to follow us on all social platforms for even more real-time updates. We'll see you next time.